Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Thursday, March 10th, 2016. And here are some of today's trends in the news. Thursday, March 10th, that's the day we've been waiting for. What was Mario Draghi, head of the European Central Bank, going to do after, you may recall, being at Davos back in January, promising after the biggest hedge fund operator, Ray Dalio of Bridgewater Associates, called for more stimulus, and Mario said, "Whew, you waiting too much, and we're going to do it for you." So what happened? Well, before that happened, over there in Asia, happened in the opposite way last night. Shanghai was up, and then it went down over 2%. Nikkei up a little bit, and Hang Seng hanging out just about equal. And then in Europe, in anticipation of Mario Draghi's stimulus measures and negative interest rate policy, the markets are up. And then they announced it. The big news. ECB pulls out all stops, cuts rates, and expands quantitative easing. A bazooka, they called it. The European Central Bank delivered a surprise package of measures to kickstart Europe's economy, cutting its main interest rates and expanding its massive bond buying programs. Kickstart. Think of that word, they said. Hey, Gcelente, I thought you kickstarted this over a year ago. Oh, no, I forgot. The GDP over there in Europe is only like chugging along at about 1.4%. Oh, yeah, but we're going to kickstart it this time. Yeah, you know what they're going to kickstart, right? Yeah, kickstart it for the rich guys. But let me continue. The bank's president, Mario Draghi, said the outlook for economic growth in the Eurozone had been revised slightly down, mainly reflecting the weakened outlook for the world economy. So, quote, while very low or even negative inflation rates are unavoidable over the next few months as a result of movement in oil prices, it is crucial to avoid second-round effects, Draghi said. You know what that is.
Warning, warning, bullshit alert.
Bigger than oil prices. Yeah. Oh, let's forget about that commodity index that floats down between 1991 and 1999 levels. No, we're just going to really be stupid or a con man and just call it oil prices or China. That's right. Remember, they only add up to 1 and 1, 2. So here's what they did. Remember I was saying the word on the street was they were going to go from 60 billion euros of stimulus with bond buying? Well, they went up to 80 billion a month. That's right. And check it out. They're going to buy corporate bonds. Yeah, capitalism, huh? Fascism. The merger of state and corporate powers. Yep. The ECB will add corporate bonds to its assets it can buy, specifically investment-grade, euro-denominated bonds issued by non-bank corporations. Draghi, yeah. It said it would reinforce the momentum of the Eurozone's economic recovery. They get away with this crap. There is no economic recovery. The data proves it. The data proves that 60 billion a month wasn't working and negative interest rates weren't working. But it will this time because Draghi says so. Quote, we have shown today that we are not short of ammunition. Well, guess what? Draghi's shooting blanks, man. Yeah. Maybe a little Viagra will help you out, Draghi. Because here's what happened, man. Draghi's shooting blanks. Yeah, the markets were way up on that news. That's right. Way up, over 2% across Europe. In the United States on the news, choo, the market shot up over 100 points. Gold, poof, choo, went down 12 bucks. And then all of a sudden, the tide turned. That's right. The Eurozone closed down negative, between 1 and 2% down. United States, the Dow was down over 150 points, closed down around 5. So here's the way the prostitutes tell the story, CNBC. U.S. stocks closed mostly lower Thursday under pressure from low oil prices and concerns about the effectiveness of monetary policy following the morning's announcement from the European Central Bank. So there we are. And you know why they're saying it? Because Draghi hinted that there might not be any further cuts. Now let's get this straight. They're deep in negative interest rate territory. What difference would it make if they went a little deeper? Because it's not working. Gold climbs as euro rebounds on ECB comments. That's right. Gold went up today almost 1.5%, closing at around 1270. Go back, as we've been doing, Davos, when all this began, when Draghi made the Pledge of Allegiance to Dalio at the that hedge fund cat down there, when he wanted more stimulus, that he would do it. And then the next week, same cat at Davos, was at Davos, the head of the Bank of Japan. Yeah, after he told Parliament he wasn't going to go into negative interest rates, went to Davos, and then a week later they had negative interest rates in Japan. Yep. It's not working. Gold back then, it's up over 160 bucks since all this started. But again, you saw what happened. Gold went way down on this news and then bounced back up. Rates will stay low, very low, for a long period of time and well past the horizon of our purchases, Draghi said. From today's perspective and taking into account the support of our measures to growth and inflation, we don't anticipate that it will be necessary to reduce rates further. And that's what freaked everybody out. So here you had the Pan-European Stock Index. Remember, I told you it went up, shot up over 2.5%. When Draghi began to speak, it closed down 1.6%. So there you got it. But then you look at the news leading up to it. This is in today's Financial Times. This should come as no surprise. Draghi sets out to show he has tools to fix the economy. Who can get away with something like this? You only get away with it when you're a higher up or a policymaker. Skepticism grows that ECB can raise inflation after years of asset purchases. Again, this whole line of raising inflation has to be one of the most moronic pieces of garbage being thrown out and repeated. Can anybody get it in their head? The reason everything is deflating is because there's another word that goes with that. It's called depression. There's a depression in pricing because there's too much supply, not enough demand, and all the dough in the hands of the very few. As we well know, 1% owns more wealth than half the world's population combined. I've gone over these numbers over and over. So this thing about boosting inflation is a lie. And it's not a lie, it's a con. It's a snake oil con, a carnival man's con game, central bank con. Anyway, skepticism grows that ECB can raise inflation after years of asset purchases, mounting doubts in the Eurozone and beyond about monetary authorities' ability to grapple with the global threat of deflation. The benefits of doing more is very low at this stage, said this Mr. Wolf, Gutman Wolf, director of Bruegel, a Brussels-based think tank. So if growth is expected to be weak, that means businesses are not going to invest. And German banks this week issued debt at negative yield, which means a lender loses money if they hold on to the bond for maturity. Senior bankers warn ECB over perils of negative interest rates. Today's headline in the Financial Times. Alerts sounded ahead of expected further cut. Leaders feel crippling effect on profits. Commercial bank executives are alarmed by the crippling effects on profits of negative interest rates, which they cannot pass on to customers, adding to concerns about the fragility of the financial stability in some parts of the Eurozone. The head of the Austria's Erste Bank said another cut could encourage financial bubbles, hurt economic growth, and create social disparity by penalizing savers. That's right. Penalizing savers. It's a war against savers. But low rates are the name of the game. Over there in New Zealand, the benchmark index was up 0.5% after the Reserve Bank of New Zealand surprised markets this morning with an interest rate cut. The central bank reduced its official cash rate by 25 basis points to 2.25%. Wow, 2.25%. You better lower them down to zero. What's the matter with you guys? So here we go. You know, as TrendsJournal subscribers, you could go way back to when all this began. Again, yesterday was the anniversary of the bottom of the S&P and the Dow, when it moved up because of quantitative easing and zero interest rate policies. And we wrote in a trend alert and in the Trends journals, this was a cover-up, not a recovery. We called it monetary meth, and that's all it is. But now it's even come out of a Federal Reserve Bank president's mouth. Just 2 months ago, former Fed President Dick Fisher admitted that, quote, the Fed front-loaded an enormous market rally in order to create a wealth effect. Okay? As we've been saying, 95% of the dough went to 1%, the wealth effect, since 2009. Yesterday, he's on CNBC, and here's what he said. We injected cocaine and heroin into the system, end quote, to enable a wealth effect. And, quote, now we are maintaining it with Ritalin. Fisher also confirmed his previous warning that, quote, the Fed is a giant weapon that has no ammunition left. No ammunition left? Shooting blanks? Hey, you're on Ritalin? How about some Viagra? But check out the line that he said. In order to create that wealth effect, quote, we injected cocaine and heroin into the system. Cocaine and heroin. Hey, those are two illegal drugs, aren't they? That's right. The banksters, the bankster bandits, injected illegal drugs into the system to keep their money junkies high, man. That's all they are. Arrogant money junkies with a bad attitude, creating nothing but loads of wealth for themselves as they screw we the people. This is Gerald Celente, and that's some of today's trends in the news.